So the bulls have a huge advantage in momentum over the bears. In fact, I would dare to say that there are no bears.
Traders, Nick here on Sunday night, 9:15, trying to strategize a potentially pretty pivotal week. We have the Fed is the highlight of the week, middle of the week on Wednesday, 2 p.m. Mark your calendars. There should be some pretty large moves, up or down, we won't know. It's a double coin flip of sorts. Let me explain. The Fed is expected to cut rates. There is no doubt about it. The market has priced in 100% chance of a rate cut. I believe half of them expect half a point rate cut. I think that's pretty aggressive. So the reason why I say double coin flip, it's whether he cuts, and if he cuts, how much. I'm going to add a third coin flip for what he says on going forward. If he going forward says we're going to cut systemically every so often, the market will take off. And I will share some levels. We are currently looking on the SPY, but in a minute, I'm going to switch focus to the more important Nasdaq. The Dow I won't discuss. It almost made all-time highs on Friday. Super, super bullish. And the IWM I will discuss last because it is trying to make a comeback. The S&P is at the all-time high. You can see it right there. We're looking at it. It sneezes higher and it's gone. Now, if we reach 572, that is the actual measured target of the breakout from 460. And I will probably start setting up bearish positions once we hit that level. But here's the tricky part. They won't be short-term. I will not risk fighting the short-term uber bullish people. I will go out months and place bear call spreads strategically, just like I did in the first half of the year, and they all paid with the two corrections. I will post, of course. So the upside is almost a given. It will take some pretty wild disappointments of the markets to come down. Let me switch over and I'll tell you why I am more focused on the Nasdaq. You can see how visibly it is lagging. It has a few battles to take out before it hits the big battle up there. Last week, NVDA played an extremely important role in the bounce. So that is it acting to save us in August off of the correction, and it just acted to save us in September to create a bounce, tradable bounce. So why isn't it leading? Also to note, the Nasdaq and its friends inside the QQQ are the reason why markets are going higher. AI this and AI that. NVIDIA is the mother of all AIs. So I would like to see it catch up. And I'll flip to it and you'll see how it is also kind of like the Nasdaq, lagging. So maybe the bullish thesis is that this group of stocks will explode higher. So maybe those are the stocks that are waiting for the incremental buy, and the acceleration might be bigger than, say, chasing the IWM, the small caps. Maybe there is rotation back out of the small caps, which rallied 2.5% on Friday. Now, how do I trade this mess? Very simple. I've been very consistent. I'm going to repeat it. As an investor, I'm not rushing to go in all in on anything. If I like NVIDIA, I will take a partial position, and you saw me stepping up to the plate, selling puts on bad days. That would be the best way for me to go long. And if I leave room to buy more stock later, perfect. Strategically trading short term, this is what I call tactical trading, in and out, absolutely. Plenty of trades to be had short term on the SPY, for example. We are buying dips. So if I'm a bull, of course, we're headed higher. But let's say we dip. Okay, if we dip into the last 10 days support, into 538, I expect solid support. So I would try to buy that dip. If we lose it, we may end up in the low 500s. And the tricky part is, it might be quick. I don't think it's likely, but if it does happen, it might be pretty quick and surprising. I personally would rather make my trades tactically after the event, once I have information at hand. I can tell you I will be hedged into the event. If I find myself too bearish, I will buy calls to protect myself short term against the mega rally. They only need a spark. So far, Mr. Powell has been more than gracious in offering those sparks. The IWM, I'll show you the visual.
it is facing some pretty good resistance within 2% and some stronger resistance within, I believe, 6%. Stay nimble. Those were my words from last week. In both directions. I repeat those. Stay nimble in both directions, meaning I wouldn't overcommit a large portion of my portfolio to be in danger as an outcome from this week. I need to live to trade another day. We're in it for the long term. Stay safe.